Okay, so this is just going to be an update video of all the stocks that I've really talked about up to this point. Hopefully going to go through them relatively quickly, just give my opinion on where it is that we will see these stocks moving. So I'll look at SPY, the S&P 500, gold, so / GC, JNUG JDST, NIO and Boeing. I'm just going to look at those, and then I'll have one more at the end that I'm going to look at. But starting with SPY, just because it is the overall market indicator, S&P 500 ETF. So again, this is the 180-day 4-hour chart. I like to look at it from a broader time period so that I can just get an idea of what the chart is looking like. So again, we've come all the way down from these December lows all the way up, and we broke this resistance here, and now we are at the 290 mark, heading towards this 293.95 high. So it looks as if if we continue this uptrend, we will end up breaking through that 293.95 high. It is earnings season, so it'll be interesting to see how earnings affects the overall market. So far, we're looking pretty good. We will zoom in here on this 4-hour chart. You can see starting off Monday here, we had a little bit of a dip. So this was the opening candle on Monday. We came all the way down, almost touched 289 flat, got down to 289.08. Buyers stepped in, and we came back up. And now, after hours, we are roughly around this 290.30 mark, and I believe the high was this candle right here at 290.47. So if we break through that, we can see this little consolidation is continuing its uptrend, and right now it's looking like we might see that play out. We had this sell-off Monday morning, and buyers stepped in. So if we would have seen that continue to come down, maybe tap this 50-day, and maybe fail through that and come down here to the 100-day, and even this 287 support line, that would have shown some weaker signs. But it looks as if we are going to continue to move upward. Again, that's just my opinion, but on the 4-hour chart, it looks as if we have some buyers stepping in. We'll move to the 1-hour chart, and again, we can see some more signs of support. So here was the sell-off this morning, just small, nothing major. Bounced off of the 100-day on the hourly chart before we saw the buyers move in and take this up. And again, after market hours, we are at about 290 on SPY. And let's look at the future here. This is /ESM. Or ES, excuse me, M is for May. So here we're looking, again, you can see here was the sell-off this morning. It's basically the same chart as SPY. Bounced off the 100-day, buyer stepped in, but we are still right here, say in the ballpark of 29.13. So if we can see this pop and hold an hour-long candle above this 29.13 mark and press on forward, I think that we will be looking pretty good. But that is, that's just my opinion. If you think, maybe we won't even reach above these highs, maybe tomorrow morning we try and push through and we fail, we could come back down. We would want to see it not go lower than what we saw Monday morning. We'd want to see maybe it put in a low around here, maybe bounce off of this 50-day, but we wouldn't want to see it go lower than Monday. That wouldn't necessarily be a good sign. We can look at this chart on the 4-hour for some potential indications of where it would stop if it were to go lower. I'd say you could put in a line, little support line right here, these tops. which would be the 2900 mark. We would not want to see it break the 2900 mark. I feel like that is a very strong support level at the moment. So if we were to come down, you would want to see it bounce off the 2900 mark. And you can see here, we came down to the lows of 29.50. So that would be $2,900.50 on /ES. So this is the S&P 500 future. So we want to see it push through, and we've got plenty of green candles coming off that Monday morning low. So if we can just keep pushing, that would be very strong signs that we may go and test that all-time high within the next couple of weeks. Moving ahead, we will look at gold, which has taken a tumble here recently. So still on the 4-hour chart, we have this wedge drawn now, and I can take these lines off so I can kind of explain to you what my thought process was here, just so it's a little bit more clear. So this is the 180-day 4-hour chart, and specifically I have been looking right around here, so since the beginning of this year. So we started off the year, somewhere right down here at the 1285 mark. We moved all the way up and hit this high of 1349, call it 1350, before selling back down to the 1285 mark again. So there was support there. We came back up, but we did not make higher highs. We came up to the roughly 1320 level with highs of 1325 before coming back down, consolidating around the 1295 area before breaking back through 1300 and then coming back down. And we broke through this 1295. You can see there was a little bit of support there, but then we broke through. And right now we're looking to see if we can hold this 1290 mark, but it is not looking all that good. You can see the moving averages are now pointing downward, so we'd want to see it hold this 1285, which we saw it do prior in the beginning of March and back here at the beginning of the year. But I can zoom out and I'll throw those trend lines back up there that I had. So this was the trend. Actually, I'm pretty sure when I originally drew it, I had it coming all the way from back here. There we go. That's what I was looking for. And then from the highs downward. So you have this little wedge forming here, and it looks as if we are going to break to the lower side. And this is a pretty valid wedge. You can see right at the beginning of March, we bounced off of it, came up, and this is where we have our second point where we were able to draw our wedge, and then we would have been able to make a trade right in here. So came down, we tested it a couple times, it broke through, and every time it broke this trend, it was met with buyers. You can see these big green candles sticking out here. Every time we broke this trend, buyers stepped in, and we eventually moved higher. And if we had this trend line drawn in place, we would have seen that right around here, this $13-15 mark would have been a good sell. And then we would have wanted to have seen buyers step in and maybe take this all the way through the upper end of this this wedge, but it failed. You can see we've broke lower, and it doesn't seem like we have buyers that are willing to step in like we did these other times, right in here and right here. So with that in mind, I would say that this will continue lower, and that we will see the 1285 level touched again. And if we do not hold there, we will go to the 1280 level, if not lower. So if we do break both the 1285 and 1280 levels, I think we could be coming down here to the 1275. Usually moving in $5 increments here. So we'll just have to wait and see how that plays out for the rest of this week. But we'll go ahead and look at JNUG. So here you go. It's relatively the same story, just with bigger swings. So we have the $9 price point is our big price point that we have been looking at. And you can see that we are flirting with that now. So I believe the last video I made, we were talking about this polling, talking about JNUG polling back up, and looking at the 1050 range, between the 1020 to 1050 range. And you can see we hit that 1050 mark, and that is where people were wanting to sell. And you saw all these sellers go in, and we had a big drop. You can see it was about a 13-14% drop that we had over those days, and now it looks as if we are trying to consolidate at this $9 point, or at this $9 price level. You can see we peaked all the way down here to 868, which was lower than these lows back here, so that's not necessarily a good sign. Not a terrible sign that it poked just a few cents lower. Buyers did step in, but it looks as if, we're not seeing a whole lot of strong movement. But if we see over these next couple days that it starts to pull upward and the price of gold tries to stick at that 1290 mark and move higher, that will be a positive sign for JNUG, and we might come back up and test some of these levels that are in here. This 920 mark was important. The 950 mark was important. So if we can consolidate and push through this 9-day moving average, I think that would be important. Right now we have not been able to break it over the past few trading days, so if we can break above it and move higher, that would be a strong side. But again, just take a look at the price of gold before entering any trades, just so you have a little bit more knowledge and you're more confident about going into your trade. On the flip side, we will look at JDST. This has been pretty positive. If you play JDST or the bear against gold, you can see from these bottoms at 36, you'd be looking at about 15% gains so far. But you can see it's running into a little bit of resistance, and that would be because JNUG is at a support right now at $9. But we haven't broken below the 9-day moving average yet, and JNUG hasn't broken above the 9-day moving average yet, so still looking positive on JDST. I think this next trading day on Tuesday will show if we can hold above the 9-day and push higher. You can see the last time we came up here into this $42 range, we started moving below. Had a quick pop above, but then we sold off and came all the way back down to 36. So if we can see, continual growth on this emerging, trend, you could say, I think we could come higher, maybe break these highs of about 43.50, and maybe come back up and test this 45 mark. But pay attention to this. If we open tomorrow below and we don't have buyers that are willing to step in and push the price higher, we could see it come back down, and maybe come back down and bounce off one of these moving averages. You can see there's a little bit of support right in here at this $40 mark, roughly. It's kind of zigzagged all over the place, but right in here around this $39 to $40 mark, we might see buyers come in, especially with this moving averages starting to move upward. You want to see it maybe bounce off those, along with validate these support lines. So that is what we are looking at with JDST. Let's go ahead and move over to NIO. So the last video I talked about with NIO, we were just looking at, we'll move it to the hourly so it's a little bit easier to see. We were talking about this trend coming here, moving downward. We had talked about it, trying to push through, bounce off these moving averages, break through this little downward trend line, and hopefully go and retest that 560 mark. We could not do that. We broke down below and then ended up breaking the 530 mark, which took us all the way back down to $5 for a few days, and I had said, if we can't hold this $5 mark, we will be looking at the all-time lows, which would have been below 490, because when we initially had this big leg down, it came all the way down to 490 before consolidating at the $5 mark and moving up to 560. So we were not able to hold the $5 mark, and we have now pushed all the way down to 472, and today we closed down 4.81%. So right now I would still be bearish on NIO. We want to see some sort of consolidation and maybe move higher, but right now it's not looking all that good. So if you're holding, you maybe want to see what we do on Tuesday and Wednesday. Hopefully we can come back up. I think this $5 price point is going to be a hard resistance to break through now that we have gone below it. So we will definitely need a lot of support and a lot of buyers and maybe some positive news to help push it up back through that $5 price point. We'll move on to Boeing. So Boeing, we had discussed, let's see, we're still on the hourly, let's move it back to the 4-hour. Last time I spoke about Boeing, we were right in here at it was April the 5th. We are moving into a Monday, and I was discussing whether or not it could hold this 380 price point. It could not. We came all the way down to this 365 level before we saw buyers come in. We took it all the way back up, where to? The 380 point where we broke last time, where we saw support and then it broke. And now we are seeing it as a resistance. So I'll just go ahead and throw in a little resistance line there. And right now, I would also say that Boeing is going to move further downward. I'd say 370 would be a good spot to maybe see some support. Would be right in this ballpark range. So if it comes and it bounces and maybe starts to curl those moving averages back upward, you can see as it starts to ride these moving averages, it shows a lot of positive strength. So if we can see it, maybe bounce off these and come up and break above those moving averages, I think that would be very positive. But as of now, I would say that Boeing has more room to go down. If it can't hold this 370 mark, look to see it hold the 365. You can see that we haven't seen it go much below the 365 price point, and each time it has gone below, we've seen buyers step in and take it higher. So the lowest that we have is 359.01 on this candlestick. So if we want to see it hold the 370 initially. If it can't hold, look at the 365. If it breaks below, we want to see buyers step in. If we just continue to waterfall sell off, I don't think that will be a very positive sign. But right now, I want to see it bounce off this 370 mark and move upward before I would be a buyer in Boeing. The last stock that I want to talk about is kind of just a wild card. This would be United Health Group. This is UNH. So UNH took a big hit last week. Again, this is just the 4-hour, 180-day. So we had this wedge forming since about mid-February. UNH had just been kind of getting pounded over its highs. We can pull it out farther. So here were its highs at 287.94. As the market started to deteriorate, so did the price of UNH. And then we started to see a rebound as the new year started, and we came all the way up to this 270 price point. And then we started to have this wedge form. Once we hit the 270 mark, we couldn't break through. Pretty solid resistance here. You can see we had multiple times where we tried to break through it and we just couldn't, and we were left with these wicks, and eventually we just sold off and came all the way back down to these lows around December, around this 235 mark. So I would say right now, And why I'm saying this is a wild card is because UNH has an earnings report tomorrow before the market opens, and over the past they have been very good in their earnings. Usually show very positive signs whenever their earnings come about, and that can always change. They could have a negative earnings, or they could miss their earnings, which would bring us back down. But this is kind of a wild card play after having such a strong fade after we broke this wedge, that we could potentially see a good upside up to this 235 mark, and maybe even higher, maybe even up to the 240 mark, which would be, let's just look at that, so it's about a 2% gain. And if we were making all the way up to 240, that's a 5% gain. So there's, this is just a wild card. Playing earnings is relatively, difficult to do. You really need to look into the financials of the company. But this will just be one that I'm watching tomorrow, just to be interested in, to see how it does after having, I think it's about a 10% drop over the 2 days. Yeah, 9. If we go all the way down to the 220 lows, it's about a 10% drop. And since then, we have seen it, start to gain some buyers after we made these 220 lows, and we started pushing higher. But again, we pushed up pretty quickly, so if we do pull back down, I wouldn't be surprised. Maybe this 227 level, where this 9-day moving average is, and if we go to the hourly, we can actually see it getting pinched right now in between the moving averages. So looking at the hourly, you can see a little bit more clearly this sell-off on Thursday, and then into Friday we sold off some more all the way down to the 220 lows, and Monday we saw this positive 3% gain on UNH, but now on this hourly chart you can see we're starting to get pinched between the 50 and the 9-day. So I think this earnings call will be important to see if we can push higher, maybe up to this 235 level, if not higher. Again, if the earnings call does not go well, I would definitely look to see that this moves lower, and maybe even making a lower low than 220. But given its past history with its earnings, I think that we will see this move higher, but we will just have to wait and see tomorrow. So thanks for watching.